We are often asked whether we use the Fibonacci numbers as a target. The answer is no, not necessarily as a target, but as a confirmation of why there is a reversal at specific levels. As illustrated in the Dow chart, when we put the Fibonacci number on from the low to the high, today's trading and the Dow just touched right on the 38% retracement level before moving up. Now that's significant in the fact that if you started seeing buying today and you knew that it was right off this moving average or this retracement level, that gave you a pretty good perspective that the bullish trading was based on that it hit a support level. Now, does this necessarily mean the downtrend is over? Well, if you note, the stochastics haven't quite gotten to the oversold area. This also leaves a suspicion that they may bounce it back up to the 200 to see if the 200 is now going to act as resistance after the support failed. And if they fail there, then we know that we're still heading down to our 50-day moving average, or be producing what we call the blue ice failure. Candlestick charts provide a clear illustration of why patterns work a lot better than just uptrending or downtrending stocks. As we can see in our recommendation on ZFGN, this fry pan bottom was in progress, and as you note, today was a big day, but this stock was still moving up over the past few days even when the market was selling off. This is to clearly indicate that a pattern is the development of investor sentiment that has a specific bias to it, even when it knows, or even including the fact that a market might be selling off. The pattern is still going to be your predominant indicator. Additionally, a lack of a reversal signal demonstrates that our recommendation to go short on Micron is still in progress ever since our bearish doji sandwich, that even with a market up big today, the pattern is still being affected by the most recent of the sell signals. So candlestick analysis has the visual graphics to demonstrate when there's been a change of investor sentiment or there is not a change of investor sentiment, and they're usually going to be more predominant in a trend once you've seen a trend will be more predominant once you see that candlestick reversal signal, and it will stay in that direction until you see an opposite candlestick reversal signal. That'll be it. We'll see you in the chat rooms.